So guys, in Falcon trading, I only trade two patterns, guys. Okay, we have a 3-task structure, we have a 2-task structure, and I only trade continuation patterns. Okay, so on this video, guys, I'll be demonstrating how to use these patterns in different scenarios. Okay, and also I'll be teaching you all the entry types, guys. We also have two type of entry, and obviously we will be looking at the charts, guys. I will be back testing with y'all, showing you this method I'm about to teach you right now. Okay, so yeah, guys, all I need from you right now is to log in, watch this video until the end, guys, because I will be breaking a lot of information and you might need it to apply it on your trading strategy. So yeah, guys, stay tuned. So yeah, guys, let's start with a 3-task structure, a continuation pattern. Okay, I only trade continuation pattern, not reversals, but continuation pattern. Okay, so let's say we had a value area, guys, maybe a 1-day value area, and then price tapped in that value area, and then after that, obviously, we wait for what, guys? Our impulsive push, which is our move going down, right? And then after that, guys, we are waiting for a correction, either a 2-task structure or a 3-task structure. But on this scenario, I'm going to demonstrate a 3-task structure. Okay, so let's say you had our impulse, right? And then price right here decide to make a pullback, leave this hook point. This is a hook point, guys. Okay, and then impulse breaking the low, coming back to break this hook point. Okay, and then obviously right there will be an entry, guys. This is an example of this kind of structure, guys, a 2-task structure. But then obviously we will move our stop loss when price moving away from our entry point, right? And then impulse, okay, and then after that failed to break this low, guys, and then coming back to complete towards a 3-task structure, guys, a 3-task structure. Okay, and then for the entry type, guys, we have two entry types, right? Our risk entry, and our reduced risk entry, whereby you take the entry when price break this low, guys. Okay, when price break this low, you put your entry right there. But then the red flag about this one is that the stop loss must be above the candlestick, guys. Always the stop loss must be above the candlestick. So from here, from there to here, guys, it might be 25 pips or even maybe 15 or 25 pips, you got it. But then it will be better, guys, if you take a risk entry right there. Why? Because the stop loss level will be above the candlestick, okay, which will give you a healthy risk to reward ratio, you got it. So yeah, guys, this is a continue. So this is what I wait for, guys, when I trade. Okay, and then same thing, guys, on the bullish momentum, guys. Okay, I wait for price to meet what a value area is. Either it's going to be a 4-hour value area, 1 hour, or even the weekly value area. Okay, and then after that, guys, I wait for what a impulse, 2 to 3 candlesticks on the impulse. If you know, you know, guys. Okay, 2 to 3 candlesticks on the impulse. Okay, and then after that, I wait for what a correction, guys, a correction. And then how I know when the correction is starting, guys, obviously you can see that here we had this impulsive push, right? And then price made a pullback and then impulse, but then failed to break this higher right there. That's where I know that, okay, now we are having what a correction. Okay, a correction. So what I do, guys, I identify this low, guys, whereby I wait for what a 2-task structure, guys, a 2-task structure, something like this. Okay, it's something like this, guys, on the right hand side, a 2-task structure. And then if I receive my entry candlestick, guys, obviously I will be taking this one, and then when price move away from our entry point, that's where I will move my stop loss to break even. Okay, and then yeah, after moving, guys, after price failed to break this lower right here, obviously we're going to have what another pullback, guys, another pullback. And then that's where we identify our structure, guys. Okay, that's where we take out our trend lines and mark the structure, guys, from point A, from point 1 to point 2, and then to point 3, guys. Okay, to point 3, and then also we mark the upper levels, guys, to identify our structure. As you can see right now, we have a complete 3-task structure, guys. Okay, and then there's another thing, guys, there's another point, okay, I want to emphasize on this video. So a 3-task structure, guys, it's have a lower risk compared to a 2-task structure. Why I say that, let me just explain the 2-task structure. Okay, why I say a 3-task structure have a lower risk compared to a 2-task structure. A 3-task structure, guys, might complete a 2-task structure. Sorry, a 2-task structure might complete 9 out of 10 eventually might complete a 3-task structure. Okay, so Okay, let me just draw the structure though. Okay, let's say you have your push, and then you have a hook point, impulse, and then a two-task structure like this, guys. Okay, a two-task structure like this, whereby you have a hook point, and then let's say you have an expanding channel this time. Expanding channel, something like this. 9 out of 10, guys. Okay, let me not say 9 out of 10, but 6 out of 10, guys. Price completes what we call a three-task structure, whereby you have your impulse, and then came back to complete what? A three-task structure, guys. A three-task structure. So that's why I'm saying a three-task structure have a higher probability of playing out, guys, compared to a two-task structure. Okay, so I hope I make sense. Okay, but then anyways, let me break down the two-task structure, guys. Okay, so let's say obviously you have a value area, you want a value area, hook point, or whatever, guys, inflection point, whatever. Okay, and then after that, guys, obviously I wait for 2 to 3 candlesticks on the impulse on the 1 hour time frame, guys. 2 to 3 candlesticks on the impulse. I will explain that, guys, when we go into the charts. Okay, so I wait for 2 to 3 candlesticks on the impulse, and then a correction, guys. Okay, whereby you can see that price made a pullback from this inflection point, guys, from this inflection point, and then impulse breaking this low, but then coming back, guys, to feel that gap. Okay, that gap, and then obviously after that, guys, I will be taking my entry right there using a risk entry, guys. A risk entry is better compared to a reduced risk entry. Why I say that? Because you trade for a better risk to reward, guys, compared to you taking the entry right there. You got it? But then it depends, guys. I also use reduced risk entry, but maybe let's say on the 15-minute time frame or the 5-minute time frame, because I know the size of the structure is small, guys. It's small. Okay, so it will give me a proper risk to reward ratio. Okay, something like this, guys. Okay, something like this. And I don't trade for a 2:1 or 3:1, guys. Okay, I hold my position for I don't even use take profit level, but then you will see, guys, on the backtesting session. But then yeah, let me just continue right now. Okay, so yeah, guys, this is my two-task structure on a bearish momentum, guys, on a downtrend. Okay, so same thing, guys, on the upper trending markets. Okay, whereby let's say you have your hook point right here, guys. Let's say you have a hook point, is either a 4-hour or daily hook point, whatever, guys. Okay, and then after that, guys, after price reaching the hook point, I like to see a break, guys, a straight break. Okay, not a something like this, guys, whereby you have your candlestick right here. Okay, not accurate, but then yeah, whereby you have a candlestick, but then I don't like to see, guys, a weak confirmation, guys. I like to see price breaking that value area, guys, with a body, not a weak, but a body. So this one is right, and this one I don't even prefer it to be my confirmation. You get it? So yeah, guys, and then after that, 2 to 3 candlesticks on the impulse on the 1 hour time frame. Okay, and then obviously I wait for what, guys? A correction, guys, a correction, and the correction must be 50% of the impulse, guys. The correction must be 50%. So right here is not accurate, but then you will see on the chart, guys. Okay, so yeah, obviously I wait for impulse, guys, and then pull back, impulse, fail to break this high right there. I know that's okay. Yeah, my correction is starting either a two-task or a three-task structure, but then yeah, it is what it is. And then obviously when price fails to break that high, it will come back to that value area, that same inflection point, and then after that I take what, guys? A risk entry instead of a reduced risk entry. Why? Because of the stop loss level, guys. It's a stop loss level. Okay, and if you want to learn about the candlesticks, guys, the entry candlestick, I already made a video about that one. I will leave a card, I will leave an end screen, guys, at the end of this video, so be sure to watch that video. Okay, so yeah, guys, this is how I trade the Falcon trading strategy. Okay, so for now, let's go to the chart, guys. Let's go to the chart. I will be back testing with y'all, and I will be using FX Replay, guys. FX Replay, I'm not affiliated, but it's the best software for back testing. It's for free, guys. Okay, I will try to leave a link in the description. Be sure to support them, guys. Okay, yeah, so yeah, let's dive in.